Hello, and welcome back to Boni's Life, the channel where we dissect the crypto markets with a scalpel, not a sledgehammer. If you're tired of the screaming moon boys and the doomsday prophets, you've come to the right place. Here, we trade in data, logic, and a healthy dose of intellectual curiosity. And maybe, just maybe, a little bit of dry humor to keep us all sane in this wonderfully irrational market. Today, we're doing something a little different. We're firing up our analytical engine and we're pointing it directly at the future. The year is 2026. What will the crypto landscape look like? Which narratives will be dominating the conversation, driving the gains, and, let's be honest, causing the most arguments on Twitter? Forget the short-term noise. We're looking for the tectonic shifts, the foundational changes that will define the next era of digital assets. Now, predicting the future is a fool's errand, right? Well, yes and no. While we don't have a crystal ball, we do have something better, a framework. We're going to analyze the most promising narratives based on a set of rigorous criteria: growth potential, institutional adoption, technical maturity, regulatory alignment, and real-world utility. We'll score each narrative, rank them, and give you a clear, actionable understanding of where the smart money might be flowing. So, whether you're a seasoned trader or just crypto curious, this is the deep dive you've been waiting for. Let's get into it. All right, let's kick things off with a narrative that's less about reinventing the wheel and more about putting the entire global economy on new blockchain-powered wheels. I'm talking about real-world asset tokenization, or RWAS. This isn't some pie-in-the-sky concept. It's happening right now, and it's poised to be one of the most explosive growth areas in the coming years. So, what exactly are we talking about? In simple terms, RWA tokenization is the process of creating a digital representation of a real-world asset on a blockchain. This could be anything: a piece of real estate, a government bond, a fine art painting, even a company's future revenue. Instead of a paper deed or a certificate in a vault, you have a digital token that represents your ownership. As of late 2025, we're already seeing over $35 billion in real-world assets tokenized on-chain, and that's excluding stablecoins. Projections from industry leaders suggest this market could swell to tens of trillions of dollars within the next decade. When you hear numbers like that, you start to pay attention. Why is this so significant? Because it bridges the gap between the traditional financial world, TradFi, and the world of decentralized finance, DeFi. For the first time, we can take illiquid real-world assets and make them liquid, divisible, and programmable. Imagine being able to buy a fraction of a commercial building in Tokyo, or use your stake in a portfolio of fine wine as collateral for a loan in DeFi. This is the future that RWA tokenization unlocks. Institutions are already making their move. We're seeing major players like pension funds, family offices, and hedge funds actively exploring this space. Aave, one of the giants in DeFi, has already launched its Aave Horizon market, a permissioned platform specifically for tokenized real-world assets. This isn't a test run. This is the foundation being laid for a new financial infrastructure. Now, let's apply our framework to RWA tokenization. Growth potential. The addressable market is, in a word, colossal. We're talking about the entire global economy. The potential for growth here is astronomical, easily a 10 out of 10. Institutional adoption. This is where RWAs truly shine. Institutions are not just interested, they are actively building and participating. This is a clear 9 out of 10. Technical maturity. The technology is here and it works. We have established standards like ERC20, and platforms like Aave Horizon are proving the model. I'd give this a solid 8 out of 10. Regulatory alignment. This is the main hurdle. Regulators are still figuring out how to classify and oversee these new digital assets. However, the fact that institutions are so heavily involved suggests that a path to regulatory clarity is being forged. I'll rate this a 6 out of 10 for now, with significant upside potential. Real-world utility. The utility is undeniable. RWA tokenization solves real-world problems of illiquidity and accessibility. This is a 10 out of 10. So with an average score of 8.6 out of 10, RWA tokenization is a powerhouse narrative for 2026. It's not just about crypto anymore. It's about the tokenization of everything. This is a trend you simply cannot afford to ignore. Next up, we turn our attention to the king itself, Bitcoin. For years, Bitcoin has faced the same criticism. It's slow, it's expensive, and it can't handle the demands of a global financial system. With a transaction throughput of around 7 transactions per second, they have a point. But the narrative that Bitcoin is just a store of value, a digital gold, is starting to look incredibly outdated. Enter the world of Bitcoin Layer 2s. This is a narrative about unlocking the immense potential of the most secure and decentralized blockchain in the world. Bitcoin Layer 2s are solutions built on top of the Bitcoin blockchain that allow for faster, cheaper transactions, and most importantly, for the development of a vibrant ecosystem of applications. We're talking about DeFi, NFTs, and smart contracts, all secured by the power of the Bitcoin network. We have a few key players in this space, each with a different approach. The Lightning Network is the most well-known, enabling near-instant, low-cost payments. It's perfect for micropayments and everyday transactions. Then you have projects like Stacks, ticker symbol STX, which brings full smart contract functionality to Bitcoin, allowing for the creation of decentralized applications and DeFi protocols. And we're seeing the rise of more advanced solutions like Melon Chain, which is bringing ZK rollup technology to Bitcoin for enhanced scalability and privacy, and Rootstock, or RSK, which offers an EVM-compatible sidechain, making it easy for Ethereum developers to build on Bitcoin. This isn't just a theoretical exercise. The Bitcoin Layer 2 ecosystem is exploding with activity. We're seeing a Cambrian explosion of innovation, from new DeFi protocols to NFT marketplaces, all built on the foundation of Bitcoin. This is a direct challenge to the dominance of other smart contract platforms and a powerful narrative for the future of Bitcoin. Let's break it down with our framework. Growth potential. The potential to unlock the vast liquidity of Bitcoin for a new generation of applications is immense. The growth potential here is a solid 9 out of 10. Institutional adoption. While still early, institutions are taking notice. Their ability to build on Bitcoin, an asset they are already comfortable with, is a huge draw. I'll give this a 7 out of 10. Technical maturity. The technology is rapidly evolving. The Lightning Network is mature, while other solutions are still in their growth phase. Overall, I'd rate the technical maturity at a 7 out of 10. Regulatory alignment. Bitcoin has the clearest regulatory standing of any cryptocurrency. Building on top of it provides a level of regulatory safety that is very attractive. This is a strong 8 out of 10. Real-world utility. The utility is clear, making Bitcoin a more useful and versatile asset. From payments to DeFi, the use cases are expanding daily. This is a 9 out of 10. With an average score of 8.0 out of 10, the Bitcoin Layer 2 narrative is a powerful contender for 2026. It's a story of innovation, scalability, and the reawakening of a sleeping giant. Don't be surprised to see Bitcoin become a major player in the world of decentralized applications in the years to come. Now, for a narrative that feels like it's been pulled straight from a science fiction novel, but is rapidly becoming a reality, we're talking about the convergence of artificial intelligence and cryptocurrency, specifically the emergence of AI agents as autonomous economic participants. This is a prediction championed by venture capital giant Andreessen Horowitz, or a 16Z, and it's a profound one. They predict that by 2026, we will see the first real wave of AI agents that can own, manage, and transact with digital assets. Think of an AI that can automatically pay for the data it needs to learn, or a decentralized application that can hire and pay for its own server resources. In the financial services sector alone, AI agents already outnumber human workers by nearly 100 to 1, but they are currently unbanked ghosts, unable to interact with the economy directly. This is about to change. To make this happen, we'll need a new identity layer, what a 16Z calls Know Your Agent, or KYA. This would be a cryptographic way to verify an AI agent's identity, its permissions, and its owner. Once this is in place, the floodgates will open. This leads to the second part of this narrative, the vanishing of payments. As AI agents begin to transact with each other at machine speed, payments will cease to be a separate action and will instead become a native, invisible part of the internet's infrastructure. The need for traditional payment rails will diminish as value is settled instantly and programmatically on the blockchain. Let's run this through our framework. Growth potential. The potential here is mind-boggling. We are talking about creating an entirely new economy, populated by autonomous AI agents. The growth potential is off the charts, a clear 10 out of 10. Institutional adoption. This is still very nascent. While major tech companies are heavily invested in AI, the intersection with crypto is just beginning to be explored. I'll give this a 5 out of 10 for now, but with the potential for rapid acceleration. Technical maturity. The underlying technologies, AI and blockchain, are maturing, but their integration is still in the early stages. We need to see the development of robust KYA solutions. I'd rate this a 6 out of 10. Regulatory alignment. This is a minefield. The legal and ethical implications of autonomous AI agents with financial power are immense. Regulators are not even close to figuring this out. This gets a 3 out of 10. Real-world utility. The utility is immense but still largely theoretical. The potential to automate vast swathes of the digital economy is there, but we need to see it in practice. I'll give this a 7 out of 10 based on its potential. With an average score of 6.2 out of 10, the AI narrative is more of a long shot for 2026, but it has the highest potential for disruption in the long run. This is one to watch closely as its development could be exponential. It's less of a trade for today and more of an investment in the future of the internet itself. Our next narrative is one that operates in the shadows, both literally and figuratively. It's the critical and often overlooked theme of privacy. For years, the crypto world has celebrated transparency. Every transaction, every balance is open for the world to see on a public ledger. But let's be brutally honest, this is a bug, not a feature for any serious financial activity. Think about it. Would a hedge fund want to broadcast its trading strategy to the world? Would a corporation want its competitors to see every payment it makes to its suppliers? Of course not. This is where the narrative of privacy-first blockchains comes into play. The argument put forward by thinkers like Arthur Hayes and the team at a16z is that institutional adoption simply cannot and will not scale on public by default blockchains. Privacy is not a niche feature. It is a fundamental requirement for the next wave of financialization. This leads to a powerful concept called privacy lock-in. Once a user or institution moves their assets onto a private chain, it becomes incredibly difficult and risky to move them off. Why? Because moving secrets leaks metadata. This creates a powerful winner-take-most dynamic, where the blockchains that get privacy right will build an incredibly strong moat around their ecosystems. We're not just talking about privacy coins like Monero or Zcash. We're talking about smart contract platforms with built-in privacy at the protocol level and layer 2 solutions on networks like Ethereum that offer private transactions. This is a direct response to the needs of the market. As the crypto space matures from a retail-driven casino to an institutional-grade financial system, the demand for privacy will only intensify. The ability to conduct business on-chain without revealing sensitive information will be the key that unlocks the next $1 trillion of capital. Let's score this narrative using our framework. Growth potential. The potential to capture the entire institutional market is enormous. If privacy is the key to unlocking institutional DeFi, then the growth potential is a massive 9 out of 10. Institutional adoption. The demand is there, but the solutions are still emerging. Institutions are actively looking for private execution venues, but the options are limited. I'll rate this a 6 out of 10. Technical maturity. This is the main challenge. Building secure and scalable privacy technology is incredibly difficult. While we have promising technologies like ZK proofs, they are still complex and resource-intensive. The technical maturity is a 6 out of 10. Regulatory alignment. This is a double-edged sword. While regulators understand the need for privacy in traditional finance, they are also wary of its potential for illicit use. The regulatory landscape is uncertain, so I'll give this a 5 out of 10. Real-world utility. For institutions, the utility is paramount. The ability to operate on-chain with confidentiality is a game changer. This is a clear 9 out of 10. With an average score of 7.0 out of 10, the privacy narrative is a dark horse for 2026. It's a complex and challenging space, but the demand is undeniable. The projects that can crack the code of scalable, compliant on-chain privacy will be the big winners of the next cycle. Our final narrative is about the evolution of the very heart of the crypto ecosystem, decentralized finance, or DeFi. For many, DeFi is synonymous with the speculative frenzy of yield farming and liquidity pools. But as we look towards 2026, we're seeing a profound shift. DeFi is growing up. It's moving beyond the casino and into the realm of a legitimate institutional-grade financial system. The numbers speak for themselves. In late 2025, the total value locked, or TVL, in DeFi is approaching $150 billion, with projections pointing towards $200 to $250 billion in the next year. This isn't just Dagon money chasing unsustainable yields. This is a sign of real sticky liquidity entering the space. The key driver behind this growth is the increasing institutional participation in DeFi. We're seeing a move away from purely speculative activities and towards more stable utility-driven applications. This maturation is happening on multiple fronts. We're seeing the rise of Bitcoin-based yield opportunities, which are bringing the largest pool of crypto liquidity into the DeFi ecosystem. We're also seeing the development of more sophisticated financial products. From structured products and derivatives to on-chain credit markets, the Wild West days of DeFi are coming to an end, and a more mature, professionalized ecosystem is taking its place. This narrative is not about a single technology, but about the convergence of multiple trends, the growth of Layer 2s, the tokenization of RWAs, and the increasing demand from institutional investors. It's about the professionalization of a once niche corner of the crypto market into a global financial system. Let's apply our framework to the DeFi maturation narrative. Growth potential. The potential to absorb a significant portion of the global financial market is vast. As DeFi becomes more institutional friendly, the growth potential is a strong 9 out of 10. Institutional adoption. This is the core of the narrative. Institutions are no longer just watching from the sidelines. They are actively participating and building. This is a solid 8 out of 10. Technical maturity. The DeFi ecosystem is one of the most battle-tested in crypto. While risks remain, the core infrastructure is robust and constantly improving. I'd rate this an 8 out of 10. Regulatory alignment. Regulators are paying close attention to DeFi. While challenges remain, the move towards a more professionalized and compliant ecosystem is a positive sign. I'll give this a 6 out of 10. Real-world utility. The utility of a more efficient, transparent, and accessible financial system is undeniable. This is a 9 out of 10. With an average score of 8.0 out of 10, the maturation of DeFi is a powerful and multifaceted narrative for 2026. It's a story of a revolutionary technology coming of age, and it's a trend that will have a profound impact on the future of finance. So, there you have it. 5 powerful narratives, each with the potential to reshape the crypto landscape in 2026. We've dissected them, we've scored them, and now it's time for the final ranking. Let's put it all together. In the top spot, with an impressive score of 8.6 out of 10, we have real-world asset tokenization. This narrative is a juggernaut, driven by immense growth potential and strong institutional adoption. It's the bridge between the old and new financial worlds, and it's being built right now. Tied for second place, with a score of 8.0 out of 10, we have the Bitcoin Layer 2 awakening and the maturation of DeFi. These two narratives are deeply intertwined, representing the scaling and professionalization of the core crypto ecosystem. They are both powerful, and both are essential for the long-term health and growth of the market. In fourth place, with a score of 7.0 out of 10, is the privacy imperative. This is a critical narrative, but it faces significant technical and regulatory hurdles. It's a high-risk, high-reward play, but one that could pay off handsomely for the projects that get it right. And finally, in fifth place, with a score of 6.2 out of 10, we have the rise of the machines. The convergence of AI and crypto is a fascinating and potentially revolutionary narrative, but it's still in its infancy. This is one for the long-term watchers, the true visionaries. So, what does this all mean for you? It means that the crypto market is evolving. The days of easy gains from meme coins and hype-driven projects are numbered. The future belongs to the builders, the innovators, and the projects that are solving real-world problems. The narratives we've discussed today are not just stories, they are roadmaps to the future of finance. As always, this is not financial advice. This is a framework for thinking about the market, for cutting through the noise, and for making your own informed decisions. The crypto space is a dynamic and ever-changing beast, and the only way to succeed is to stay curious, stay critical, and stay ahead of the curve. Thank you for joining me on this deep dive into the future of crypto. If you found this analysis valuable, do me a favor and hit that like button, subscribe to the channel, and let me know in the comments which narrative you're most bullish on for 2026. I'm Boni, and this is Boni's Life. I'll see you in the next one.